Hi, this is Alan Gassman. I used to be an estate planning and tax lawyer. Now I'm a PPP lawyer, struggling to recover from it. I'm here with Brandon Ketron of my law firm in Clearwater, Florida, and CPA Kevin Cameron. Kevin is a Tampa CPA who's supposed to be on vacation, but he can never go because he's always updating his spreadsheet for the PPP loan changes. We've been writing, talking, and lecturing on these issues that you're going to hear about right now. We just found out about 15 minutes ago that the SBA issued even more regulatory language to clear up a thing or two that we'll be talking about. A quick skim tells us that we are on the right track today. You have our email addresses here. Please send the hard questions to Brandon and Kevin and any easy questions to me, although there aren't that many easy questions left. There is a full 90-minute talk that we'll be updating soon on Weinberg's website. It's not free, but it's pretty good. But we think this presentation is free and pretty good too. We give a lot of webinars. You can sign up for one of them. These are all free on page 4. There is also an amazing spreadsheet calculator. It walks, it talks, it turns water into wine, and it helps you determine how to get your PPP loan forgiven. Buy it for your CPA or anyone else that you know who knows Excel. They need to be at least 14 years old now on average. There is a really good 4-minute summary video and then a 46-minute walkthrough you can watch for free at these sites, or you can buy it. It's not so free, but there's a money-back guarantee. And once you buy it, Kevin, every time he updates it, you can go back to the website and use your token to make use of it. Brandon, let's start on page 10 so that the viewers who consist of a lot of CPAs but also a lot of laymen can understand how these rules work.
Yeah, so there's really now 2 rules that apply, and it depends on whether you use the 8 weeks or the 24-week period. And these are just strictly related to the owner compensation replacement that you can give to your owner. Either you get automatically, or for some situations, you would have to actually pay a salary for those items. But we'll start with the independent contractors and sole proprietors. For the 8-week period, they get a credit of $15,385. For the 24-week period, it's $20,833. That's 850 seconds for the 8-week period, and then 2.5 months of the 12 months for the 24-week period is how they've came up with these amounts. For the independent contractor and sole proprietor, there's no requirement that you have to make a distribution from the company, that you have to have some sort of owner draw, that you have to pay a wage. It's just that you get forgiveness for this amount as an owner compensation replacement off the top of your loan, regardless of whether it's actually distributed from the business or not.
Now, let me mention that this assumes that you have net income from your Schedule C, line 31, of at least 100,000.
Yep.
If it's less than 100,000, then it's going to be 15.385% if you choose 8 weeks, or 20.833% if you use 24 weeks. So if you borrowed only for yourself and you're an independent contractor, then you should get full forgiveness automatically as long as you qualified to take the loan and you qualify to fill out and complete the application for forgiveness. You should be able to use the EZ loan application, and you don't have to worry about how you spend the money or what you did with the money. You are considered to have paid it to yourself for compensation, whether you did that or not.
Yep. Yeah, good points, Alan. And you can see these percentages here and how they're calculated. 2.5 divided by 12, 20.833%, and then 8 divided by 52, 15.385%. Now for general partners in a partnership, these same limitations apply. Again, you have your 2019 net earnings from self-employment that we're basing this on. If it's less than $100,000, you get 15.385% of that amount for the 8 weeks. For the 24 weeks, it's 20.833%, maxed out at these caps for general partners. You also cannot include health insurance or retirement plan expenses paid on behalf of independent contractors or general partners. You don't get credit for those amounts paid on behalf of the owner. Now for the owner employee, which we believe is a reference to S corporation and C corporation shareholders, their limitation is again the lesser of their 2019 compensation amount prorated for the covered period, or the $100,000 prorated for the covered period. So again, that's $15,385 for 8 weeks, $20,833 for the 24 weeks. If you paid yourself less than $100,000 in 2019, you're going to be limited to 15.385% of that for the 8 weeks, or 20.833% of that for the 24 weeks. You can include retirement plan expenses above and beyond these caps, but health insurance, and this was added as part of the new rules, is reported as part of your compensation included on the W-2 for S corporation shareholders with more than a 2% ownership in the entity. And because of that, these health insurance costs for the owner employees are subject to these caps. They can't be included as an additional line item separate and apart from the owner compensation. So to the extent that your salary and health insurance is over $100,000, you're just going to be limited to this $20,833 amount for the 24 weeks. If your salary is say $90,000 and your health insurance is $5,000 for the year, that adds up less than $100,000. So you can get credit for both of those, but you cannot exceed in total for cash compensation and health insurance any more than these two amounts, depending on the 8 weeks or the 24 weeks. Now for non-owners, different rules apply. $15,385 for the 8 weeks. It's the same across the board, but they allow us to go up to the full 24 weeks prorated for non-owners. So you can get credit for $46,154 of wages paid to non-owner employees. And you can also include group health insurance and retirement plan expenses above and beyond those amounts.
Okay, so again, the second column here, where it says owner employee, below that it says $15,385. If you are an S corporation shareholder and you work for the company and the company elects an 8-week period, then the most that you'll be able to use for forgiveness from the compensation during that 8 weeks is $15,385, even if you paid yourself a lot more. Unlike the independent contractor, you do have to pay yourself this amount during the 8-week period. If you go with 24 weeks, if you were not an owner, then based upon a $100,000 annual salary cap, you would have been able to get forgiveness for up to $46,154. And we thought that that's what would apply for owner employees, because they're employees also. There's nothing in the CARES Act or the Flexibilities Act that says that this 20.833 amount has to apply for employee owners, but that is what the SBA decided was fair. Kevin, any comments on this page before we go to the next page? And those of you listening, we're going to repeat all of this at least one more time before we're done in 22 minutes. So hope you will understand it when we're done.
Yeah, nothing else to add, Alan, there, except now that we know for sure that with the latest IFR, our assumptions were correct.
So Kevin, tell us again, if I own 2.5% of an S corporation and my salary is $98,000 a year and my health insurance cost is $6,000 a year, how does tax reporting work and how does this rule work?
Alan, so for somebody in that case, their W-2 wages are going to actually read $104,000 because the health insurance is included in the taxable wages on the shareholder's W-2. So in that particular circumstance, they're going to fall under the $100,000 wage limitation, and their forgiveness amount would be the $15,385 that you referenced a little while ago under the 8-week period, or the $20,833 under the 24-week period. That's based on 2.5 months of 2.5 twelfths of 2019's total compensation, which would include the health insurance. So that's how that would work in that scenario. Let's say, for example, that their pay during the 8-week period, their gross regular pay was $12,000 and their health insurance was another $3,000. They'd be okay. They would still take a total of $15,000 as their compensation in the 8-week period. But it does go against the S corporation shareholder because they can't take the maximum compensation of $15,385 plus their health insurance any longer. The $15,385 has to be inclusive of their health insurance.
Right. So when they put money, when an S corporation puts money into the retirement plan, that of course does not show up on the W-2 either, right?
That's correct. So the retirement plan contribution apparently is still good to go for an S corporation shareholder. I think we've got the latest guidance, which tells us that we can only include 2.5/12, which again is what the loan was based on in the retirement plan contribution amount.
Right. But for the non-employees, we think we can use the entire annualized, the entire amount for both 2019 and 2020 if you pay it during that 8 or 24-week period.
Right. And that's what yes, and that's what I'm seeing a lot of employers doing. They're paying their 2019 retirement plan contribution that was still due, say, by September 15th, but they're paying it in their covered period. And then they are also computing their interim retirement plan contribution for their pay, say, through May 31st or maybe even June 30th or later, depending on whether you go with the 24 weeks or the 8 weeks. So that seems to be the strategy we're seeing so far.
And then you'll have to allocate out part of the contribution or the part of the expense that exceeds the 2.5 months of 2019 amount for the owner employee.
That's correct.
Now,
so clearly they're just discriminating against owner employees is what they're essentially doing.
Right, right. So Brandon, what does page 11 tell us? Is there any new information on page 11 or just this is another reference sheet?
Yeah, it's basically the same thing we just went over, just reported in a different way, specifically focusing on health expenses and then also retirement plan expenses for the different types of entities. So you can see here, sole proprietor with employees, nothing counted for health insurance, nothing accounted for retirement plan expenses for the owner, but you can include those costs for employees. Same thing for the partnerships. For S corporations, you don't get to count that health. Again, it's included in your compensation already. So you do in a way get to count it, just it's subject to the limitation. You count whatever you pay for the group health for employees. Same thing for retirement plan expenses. Whatever you pay, you get credit for. There is a potential that these owner retirement plan expenses, as Kevin mentioned, might be limited to 2.5 months worth of the 2019 contribution amount. That language comes from the EZ application form instructions. It's not included in any of the other guidance or any of the other application instructions. So we're not entirely sure that this limit actually does apply, but it's something that you should be aware of and advising clients that might potentially apply, that you could be limited to just 2.5 months worth of 2019. And then for C corporations, you get credit for everything that was paid in the 8 weeks or the 24 weeks with the same potential limitation that could apply for retirement plan expenses for the owners.
So if you are an independent contractor or file as a partnership, if you did your application early on, you may have borrowed money based upon not only your $100,000 of net income, but also based on your health insurance and your retirement plan contribution, because you may have applied before the SBA regulations came out that said you can't use those items. So now, in order to get full forgiveness, you may need to go with the 24 months and also have sufficient expenditures on rent and interest and utilities in order to get it all forgiven. Or you may have an obligation to give back the money that you got that's attributable to the retirement plan contribution or the health insurance. These rules are not clear based upon what I read yesterday before what came out today, but we'll continue to report on that issue. So Brandon, do you want to take us through now the loan forgiveness application verbiage that you want us to look at here?
Yeah, so this is a red line version of how the loan forgiveness application changed since it was originally issued to the revisions that were issued on June 16th. So you can see that they have changed the 60% rule that we've discussed in length in prior webinars. they've added a new certification that if you are in the 24-week covered period, that your owner compensation does not exceed 2.5 months worth of your 2019 compensation for any owner, employee, self-employed individual, general partner, and then capped at that $20,833 amount because we're capping the owner compensation at $100,000. Now, there has been some question as to whether owner employee includes an S corporation or C corporation shareholder, or if they are more referring to the owner employee definition contained in section 401 of the Internal Revenue Code, which says that owner employee is just a sole proprietor, independent contractor, or a general partner owning 10% or more of the entity. That was not addressed until the recent final rules that were released late last night. And in those rules, they do specifically clarify that this reference to owner employees include S corporation, C corporation shareholders. They explicitly state that for a C corporation or an S corporation, your compensation is limited to 2.5 months worth of your 2019 compensation, capped at $20,833. So we do now have some clarity on that issue. So we need to make sure that we are limiting that compensation amount for owner employees of S corporations and C corporation shareholders. So on slide 13 here, you can see the rule that they have added on line 6 related to health insurance contributions. So we can add health insurance made on behalf of self-employed individuals or general partners, which we knew, or owner employees of an S corporations, because their payments are included in their compensation, as Kevin mentioned. They're going to be reported down here under line 9 on compensation paid to owners, which is again subject to the same limitations that we've discussed, the 2.5 month equivalent of $100,000 or less, whatever you paid yourself in 2019. For retirement plan contributions, they've added language that self-employed and general partners do not get to include retirement plan contributions, but you'll notice there's no reference to S corporation or C corporation shareholders here, so they can include the full amount of their contribution. And then we'll skip to the next slide, slide 14. Again, just showing where these are reported on the application. Line 6 is our health insurance costs, not including any S corporations costs. That's going to go down here under line 9. Retirement plan contributions are paid under line 7. That's going to be all included for S corporation and C corporation shareholders, whatever's paid in the 8 weeks, potentially subject to that 2.5 month limitation. And then also you have your state and local taxes that it can apply on employee compensation. So then we'll slide to slide 15 here, and this is the instructions from the EZ application. And on the EZ application, you can see they included this last underlined sentence here for employee owners or owner employees related to retirement plans are capped at 2.5 months worth of the 2019 contribution amount. As you saw, that was not included in the other application instructions. It's only in this EZ application. So we're not really sure here whether this applies, if this was left in by mistake, whether it's supposed to be included in the other application, whether we're going to have a set of rules for the non-EZ and a set of rules for the EZ application. There's a lot of confusion here. The IFRs released last night, I don't believe addressed this issue. I just skimmed them briefly before the presentation, and I didn't see this mentioned, but it could be hidden in some of the fine print that we'll take a look at later this afternoon and update everyone on that as well. But just be aware that this limitation could potentially apply. And then here on the later slides, we have information on the interim final rules and how they were revised as to the original rules. Again, you can see how these limitations applied and how they've changed the rules to incorporate the limitations that do apply for the owners. And I think this guidance here is relevant because it gives some insight into why they limited compensation in this way to the 2.5 months. What they were looking at trying to avoid is an owner that received a loan based upon 2.5 months of their payroll, and then also received a loan for additional amounts for their employees based upon 2.5 months of the employee payroll. But then the business had to shut down. They couldn't bring employees back to the same level of business activity that it was operating prior to the coronavirus. So they're eligible for those exceptions to not have a full head count. And then they can use the 24-week period and essentially pay themselves 24 weeks equivalent of salary, when they were only getting credit for 10 weeks of salary on the original loan application. They wanted to prevent that from happening, so they limited borrowers and owners of S corporations and other businesses, including sole proprietors, independent contractors, just to what they received on their loan amount that they can essentially pay themselves, so they don't get that windfall. Alan or Kevin, any thoughts on those items that I just went through?
You did a great job on them.
One question that seems to be posted a lot, you guys, is what happens if I didn't have any compensation in 2019? Maybe I didn't take a salary, or I didn't take as much salary as I should have. Say I'm an S corporation shareholder and I took a $20,000 salary in 2019 and I took $60,000 in distributions. Can I count those $60,000 in distributions? I think clearly the answer is no, you can't. You can only count compensation. But then the other question that pops up is, what if I started my business in 2019 and I didn't take any compensation? In that circumstance, I believe that a borrower would want to use their annualized salary that they used for the loan application in the first place. Because if you remember, we could have used payroll for the first 3 months of 2020 in our loan application. There was a lot of lenders that accepted a fiscal year period of April 1st, 2019 to March 31st, 2020. And so if I took a salary in 2020, let's say I took $10,000 a month in January, February, and March of 2020, but I took no salary in 2019, I think presumably we've got to assume that the salary limitations for that S corporation shareholder, if it's an S corp, would be based on that salary they took in that 3-month period. So in my circumstance, if they were taking $10,000 a month, they probably would have an annualized salary of $120,000, and their limitation would be at the $100,000 annual salary amount. Do you guys agree with that, or what are your thoughts on that?
Yeah, I agree, Kevin. I don't think that's been addressed in any of the guidance yet. It strictly just says your 2019 compensation, but I think that is a reasonable interpretation, especially since for new businesses that didn't start and weren't in business in 2019, you were still eligible to apply for the loan. You used those first couple months in 2020 on your loan application. So that would seem to match up here with this intent behind the limitation on owner compensation, that essentially what you get credit for forgiveness should match up with what you got credit for on the application itself. So we'll see if they provide further guidance on that, but I think that would be something that the SBA does address and would be my best guess of how they would treat those situations as well.
I agree. Okay, so I think we've covered it all, but we've got 8 minutes. So Brandon, do you want to just lead us through the sections of the article so we can?
Yeah, well, I think before we get there, do we want to just mention a couple of things we noticed from our brief read of the new IFRs that were released?
Sure.
Yeah, so one of the main things, and we'll likely do another webinar on this in more detail on what's changed, but they have now implemented a rule that if you use the 24-week period, the question was, if I didn't spend everything in 8 weeks, but I spent it by, say, week 13, week 14, can I go ahead and apply for forgiveness then, or do I have to wait the full 24 weeks? And this new rule does allow us to go ahead and apply for forgiveness after we spent all the loan money and can apply for full forgiveness. So if you spend everything that you've got loaned by the 13th, 14th week, we can go ahead and submit our application for forgiveness. We don't have to wait for the full 24 weeks. Now, related to that, if you did have a salary reduction or you did have an employee headcount reduction, the rules tell us that we have to basically extend that out to make it apply for the full 24 weeks, even though we're only applying at week 13 or 14. You don't get to be able to get credit for that only applying for those additional 5-6 weeks. You have to do it for the whole 24 weeks. So I think that's an important point to mention, and a lot of people can start planning for that, is now that we have guidance that you can submit your application earlier than the end of the 24 weeks. Kevin, any additional thoughts on how that rule is going to work? Or
I think it's going to drive some of the lenders crazy. I think it's going to drive some of the lenders crazy because of the fact that they're not going to know what the borrower's period is going to be and what they want to, what period they want to measure. So I think the lenders are going to be in this state of flux between July 1st and maybe well into early 2021, checking on their borrowers and asking them, when are you going to apply? When are you going to apply? So that might be an interesting take on the situation. I think with respect to how the spreadsheet works, I think what we'll end up seeing is that we'll still have the original 8-week and it'll stay static, it'll be fine. And then the 24-week will now be not just a 24-week option, it might be a 16-week option, it might be a 12-week option. So I think it actually helps a lot of the borrowers in as much as if I can get my FTE restoration back by the end of, say, 12 weeks, then I can go ahead and submit my application and get it done, get it submitted, and then I don't have to worry about what happens to my FTEs afterwards. That seems to be a big concern of a lot of the borrowers is what am I going to do if, say, in week 20, I can't even say open any longer and I let all my employees go? How is that going to affect my loan forgiveness now because I might have 0 FTEs at that point? That might be an extreme circumstance, but I think there's a lot of borrowers that are still worried about that. I think there's a great deal of uncertainty attached to all this still. So I think it'll help them, but we'll have to see how it works mechanically, Brandon.
Yep. So another question that I don't think we've addressed yet is what exactly is an owner employee and who does this apply to? Are there attribution rules that apply? So for example, if I'm an owner of an S corporation and I'm paying my spouse a salary to work in the business, is the spouse subject to the $20,833 limit, or can they get credit for up to $46,154 as a non-owner employee? What are our thoughts on that issue?
My thoughts remain that a spouse is not an owner employee until they define an owner employee and they include some form of attribution rules. I'm taking a bright line test on the owner employee definition to mean strictly somebody who physically owns a portion of the company.
I agree.
Yep. Yeah, and I don't think that if there's no limitation on transferring ownership if we want to pay one spouse more wages than the other. I don't think there's any rules that would prevent us from doing anything such as that. If a spouse does have just 2% ownership, go ahead and transfer the 2% to the other spouse so they own 100% of the company, and then you can pay the non-owner spouse now their full $100,000 worth of wages and get credit for the full $46,000 as an option to potentially increase forgiveness amounts as well.
And the other question, Brandon, that keeps popping up, and I'm surprised it pops up so often, but I guess there are a lot of S corporations that have shareholders that only own like 1% or less than 2%. I think that if you have an S corporation shareholder that owns less than 2% and their health insurance therefore is not included in their compensation, and that's under guidance from the IRS, I think you still count their health insurance as a separate line item in the forgiveness application.
But that's not what the regulations say, though. So the letter of the regulations seems to be otherwise. So hopefully we'll get an FAQ or a correction, or it's time to go ahead and change ownership or go ahead and cash them out until for a year or two, because that's the other thing we have here with a couple minutes left. What if I don't want to be an owner anymore? I need the 46,154. So in the 15th week, I transfer ownership to my wife and promise to never get it back. So then, or to my child, and I promise to never get it back. Now you can use 46,154 of my compensation and get this thing forgiven, because it doesn't say when you were, right? So there may be
that's correct.
Done.
Yep.
Exactly. We thank Larry Starr. He disagreed with us on what we thought what the definition of an owner employee was. Quite honestly, I think that he was right and we were wrong, but the SBA was wrong also, and therefore we were right because the SBA has the gold and makes the rules. So that is our presentation. We want to thank you for your patience in waiting to see this. If you have further questions that have not been answered by this presentation, please feel free to send us an email. We will continue to be analyzing and keeping you posted. Thanks for everything that you are doing, whether you are a financial consultant helping others or a business helping your community and helping your employees by staying open or being prepared to stay open. Have a great rest of your day.
Thank you.
Thanks.